Snap also beating expectations on the top and bottom line. We see that stock shooting higher in after-hours trading. The company reporting revenue of $390 million versus estimates of $378 million. Earnings also better than expected. The company reporting an adjusted loss of 4 cents per share. Wall Street analysts had been looking for a loss of 7 cents per share. We see the stock is now up 10% on this news. Some other key statistics here. Daily active users. This is a number that analysts had expected to decline by 2 million, sequentially. The number is actually flat sequentially at 186 million versus 184 million that was expected. So stronger daily active users than expected, showing that they are stabilizing, user engagement stabilizing, to quote Evan Spiegel in this report here. Also, I really want to highlight this daily, this average revenue per user number. This is a key metric for all the social media companies. The company reporting average revenue per user of $2.09. That's better than the $2.05 that Wall Street analysts had expected. And it also is a big jump higher from the $1.60 we saw in Q3 in terms of average revenue per user. Evan Spiegel saying here that they have started rolling out the new version of the Android application to a small percentage of the community, and they're substantially closer to achieving profitability as they've maintained a relatively flat cost structure over the past 5 quarters while growing full-year revenue 43% year over year. So far better than expected results here. Certainly reassuring to investors that that daily active user number has stabilized while we had expected it to decline, now up nearly 12%. Guys, back to you.
Julia, thank you very much for that. And Mike, on that point of the daily active users, in Q3 it fell 2 million. In Q4 it was forecast to fall another 2 million, but it stabilized. That's a big explainer for this share price.
It is. I mean, these are modest differences, but I think it just shows that the company's at least retaining some relevance among consumers. And of course, the beat on average revenue per users doesn't hurt either.
We have some more from Julia, in fact, on their guidance going forward as well. Julia?
Yes, so the company does give a Q1 outlook for revenue and adjusted earnings, saying the guidance for the adjusted earnings, which is still going to be a loss, they're projecting loss between 165 million and 148 million compared to a loss of 218 million in the year earlier quarter. That is on better than expected, better than the analyst range. Revenue is, I believe, a little bit lower than expected, projecting revenue between 285 and 310 million. That is, of course, down from the revenue this quarter, largely because Q4 is always the biggest quarter for advertising for these companies. Stock now up over 16% on the top and bottom line beat and the better than expected daily active user number.
Julia, again, thank you very much. And Sarat, the average revenue per user was $1.60 last quarter. It was expected to climb to just above $2. It did, slightly better than expected, $2.09. I mean, it does show that they've got levers to pull and a space to grow into if they can harness it all.
Right. And I think the positive out of this was people were expecting Facebook to kind of just take over the whole market. Now we've got another player that can also increase at the same time. So it tells you that the market is still bigger than what we expect it to be, and they do have the potential to grow. I think it's still hard for them because they're coming from such a small size, but I think that could happen down the future.
I mean, they talk about some of the this is interesting. We've reached over 70% of the total 13 to 34-year-old U.S. population with premium mobile video ads on a monthly basis.
70%
they're still touting that younger demographic and that they have scale and they have reach. They go on to talk about some of their made for mobile video experiences, Dead Girls Detective Agency, that sort of thing. I mean, on how they're trying to stabilize users.
And then if you monetize it, kind of like what you saw on the Facebook, more and more, if you get the same eyeballs and you get more revenue per eyeball, that's how this stock really moves.
Probably important to look at a longer-term chart when you're looking at this move right here. I mean, it had never traded below 840 till October or September of last year. So in other words, it created this very deep and low base, and now fighting.
I can't believe that statistic. 70%. Are you in the 70 of that, Sarah?
I mean, I still have Snapchat, but I have not used it.
You haven't been hit by one of those ads. Yeah.
And I'm at the very top of that age.
Yeah.
It's surprising given the attractiveness of the target.
Mike, just in terms of.
I mean, sorry. Did they have a CFO yet? Didn't they just? They have. They have to update.
That's a key thing on the call,
Yeah.
for sure. I think people are looking for, because in terms of handling on the guidance, but whether Evan Spiegel can take control of everything in the meantime. Mike, in terms of that guidance, the revenue part of it was a little bit soft.
Yeah.
And I guess the key question here, as you rightly said already, is this a one-quarter stabilization in the DAUs or not?
And a short covering move, or if it's something that can build on itself, because this was supposed to be, when it came public, a hyper growth story, right? You had to really grow into the valuation. So now it's incremental improvement, and we see if that's enough.
Sarat, final thought quickly. Do you own Snap? Do you want to?
I don't. We own Facebook, and I think I'd rather have a player that has a much stronger balance sheet and can grow through it. I think Snap down the road might have some issues in terms of capital and also in terms of intellectual capital.
They got to change the narrative away from Instagram stories, taking some of the users and attention.